Right, so let's get into some really nice stuff. Now we're really going to dig into it, going to put it all together, everything that we've learned, and we're going to go over a couple of days of price action, show you the entry approaches, the higher time frame stuff, the lower time frame stuff, type of daily cycles that we can expect, knowing if you're trading away from a higher time frame inducement, that obviously one side is going to be pullbacks and the other side is going to be continuations, using that to our advantage regarding TPs and stuff like this, just really putting it all together. So let's get it. All right, so we're going to be looking at EG on the 12th to the 14th of July. So that's 3 days. This is our higher time frame. Here, I don't know why it says H1, it's actually H4. This is our H4 time frame. So first, before I even show anything, let's just sort of go through it and let's look at where our liquidity builds up and let's just sort of see how it all comes together. So obviously we have our equal lows here, and excuse the non-perfect straight lines, equal lows here. Okay, perfect. Next, I don't think that's straight actually, sorry, these are, can't draw a perfect straight line, but like that. So equal lows, equal highs, inducement high, and then obviously another set of equal lows that we induce low, build another set of equal highs, induce high, induce low into mitigation. This is our higher time frame lit cycle. So now we know, okay, we're trading away from this, and then we come down into these equal lows, take these out, and then currently we're sitting here giving another false reaction. Again, let's just go over the false reactions here as well. So here, again, you've got to remember this is the higher time frame, it's the H4 time frame. So these are obviously quite sustained reactions. So we build these equal lows and then we give this reaction up, saying, oh yeah, it holds. So now everyone's going to think when we come back to this, oh, this is going to be the perfect support level. We're going to bounce off it and fly to the moon, right? That's obviously not what happens. And then again, same over here, smaller liquidity, smaller reaction. So we give a little reaction. Oh yeah, it's going to hold. This candle's fully bullish candle. And then vector down, take that out. Okay, interesting. And then again, we build more liquidity here, multiple rejections off of this zone, this support level. Okay, people are getting tricked, especially here where we come and take out this high. Oh, they're saying this, oh yeah, shift of market structure, we go higher. In actuality, we have lit cycle into that, lit cycle to the top side to trade away from. So let's now jump into the markup. This should all make sense. We've just gone through it, right? We had our liquidity build up here, and then obviously we also have all of our intraday stuff as well. You can see build up, inducement high, mitigation of the inducement to come lower, and then again build more liquidity, come lower, build more liquidity here. Then we see our vector candles. Okay, now we know that we should be trading away from this, but we've left all of this in balance. Obviously we don't have to come fill it immediately, but we come back up. This is now our lit cycle, our higher time frame one to trade away from, and then we trade down. Again, even at this point here, come back down into these levels, pretending that it holds. Same thing, and now we are right here where we have 1, 2, and now we're giving a reaction off of this. So what is this likely going to be? A false reaction, right? And then what you see is on the smaller time frame we have build up, like that, induce high, and then potentially mitigation. And underneath this, we have a potential mitigation to complete our lit cycle to the downside. Okay, so there you go. Obviously, with our higher time frame SMTs, it will still give a decent move on the intraday. So this is an example where you can absolutely trade. Like if you expect that you have a higher time frame SMT, you can absolutely trade it, but you just have to know, like, okay, I am like in SMT, so like overall I'm trading the pullback. So you just do have to just keep that in mind if you want to, I don't know, turn it into a swing position or whatever. All right. Then obviously the reason why this is a false reaction is because we are faking the reaction from liquidity, making it seem like, oh yeah, it's super strong, it holds, it holds, it holds. Okay, so now let's jump down. There you go, sorry. We've got our medium inducement with higher time frame liquidity above. So that's just this, but zoomed in. So what's next? It's a very good question. Let's jump down into the day itself. So coming into this day, we have build up, inducement low, into another build up, into inducement low, reacting off higher time frame, equal lows, right? Now, what are the possible scenarios that can come from this? Either we give like a little pissy reaction and then just smoke down, or we can just induce high and come down, or again, we can come all the way up to this mitigation, complete the cycle, and come to the downside. So obviously we don't want to predict, but we want to have what can happen in our mind, you know, the different scenarios, and then when it comes to actually playing them, we obviously react to what we see. We don't want to predict anything. Okay, so this is our potential mitigation. You don't want to really make things up and go like, oh yeah, this one or this one or this one, unless you've got like lit cycles coming into them and, you know, timing and stuff like that. But realistically, with POIs, you want to choose the POIs that make sense. You don't really want to just be pulling random ones, right? So why does it make sense for this to be a potential mitigation? Because this lies on the previous day high. Absolutely, it does. So it's not something that we're going to take a limit from, but if we come into it in a certain way, we can look to trade away from it because we had a very nice build up with an inducement high. Obviously, this is previous day high now, but this POI is an inducement POI, right? It's an M5 inducement POI. So it does have some nice potential. That doesn't mean that we're going to set a limit on it and hope for the best. Absolutely not. We're still going to look to use all our confluences, our entry approaches, the lit cycle, everything, right? We're not just going to randomly apply it. Okay. So from here, like I said, we can either induce high to continue lower, or we can induce low to continue higher. It's just about how far do we induce high or how far do we induce low. So coming out of this day, we have this, right? We can see, okay, we have our first, we identified this liquidity, little FU into continue higher. Obviously nothing that you would trade right here. Ideally, you don't really want to be trading until our first timing window, which is of course Frankfurt. And then again, we give the false reaction off of this liquidity. Okay, makes a lot of sense. Showing it. And then we induce high out of the channel, right? And then we come back to Asia high. We give our Asia high bounce, continuing higher. Now, right here, is this a mitigation that we would want to take? Likely not, right? Because it lies on liquidity right here. So what could we maybe expect? We could maybe expect this to be a false reaction, right? And then again, we induce this to the downside. You could potentially take this, but realistically, this zone's been tested 1, 2, 3 times. So coming back here, this would not be a trade that I'd recommend taking, because it could very well easily just continue lower. So let's only look to take the really, really clean trades. Yeah, that's going to be our objective with this. Okay, so we're still within this overall SMT, and look at what we're doing. Building equal highs, faking the reaction. Again, it's looking very nice for a potential sell, right? But we don't want to pick out a random POI unless the lit cycle is very, very clean going into it. You've got your clean vectors coming up, you know, clean build up, which we do have, and then vectors going up, right? You know, maybe into something like this. Only in that scenario. If it just kind of prats up like this, we're not too interested. Okay, so that is a really big vector candle, right? Everyone who was selling from this little fake reaction and right here, now they've been smoked, taken out, and now people are potentially looking for buys, especially with this huge vector candle, huge momentum. The only thing we do have to consider is now we're going to sort of look for sells, but there's no clean POI on the left. There's nothing there's no inducement POI or like, you know, the Asia midline POI or something like that. No, nothing stands out, right? So we don't want to go and just pick a random one. So we're going to have, if we are to take this trade, it's likely going to be without the mitigation on the left. And our mitigation will actually be mitigation of the inducement. Okay, so let's go and check that out. All right. So at first glance, this looks great, right? If you cut it off here, this looks great. We've got our build up underneath the potential mitigation right here. That's our demand candle. You can also take it from obviously the imbalance zone. So this looks really nice, but let's just because we're looking for sells does not mean that we should not consider buys and think about the buys. So look at what we've actually got for the buy side as well. Build up, inducement low, what timing? Okay, interesting. You know, maybe we should start scratching our heads. So obviously we have our equal lows right here. We have our build up into our inducement, which is also within timing, and then looks like we're coming back. Only thing that would have been nicer, you know, potential like M1 relevant break of structure right after our inducement. So we also have to consider that we have that POI that we marked from the beginning of the day, right? If we just go back, sorry, this would be the nicest one by far, the nicest one, right? This would be absolutely ideal mitigation. The only thing we don't like about this is that it lies on previous day high, and that's exactly why we're not going to use approach 1 in this case, because of that exact reason. So that is our ideal POI. We also know that the inducement that happened after LO has happened in the middle of nowhere. If we just go back again, hasn't come into anything on the left. That doesn't mean that it can't work, of course. That just means we have to be a little bit more wary of it. It's not the ideal scenario, right? Doesn't mean it can't work, but it's just not the ideal scenario. And then when you also look at it overall, let's say that this right here is our mitigation, right? Well, all of this could just be the build-up phase for that overall inducement plus mitigation high. So obviously we have a lot of questions. So let's provide some answers. As we can see, we had our build-up, our inducement within timing, we came back down, mitigated the inducement, and now we're trading up. Now we need to ask ourselves, is this still a valid mitigation, or do we need to be a bit more careful? Well, the answer is we should likely be more careful, especially now as we've had as we've had a clean inducement to the downside within timing. We can see the equal lows being built. We can see the inducement all within MM2. We know that we've got a POI higher. So now we should sort of be thinking, okay, is this the best thing to take? If you're maybe, feeling, if maybe you have a bigger risk appetite and you want to take less confirmed trades, then absolutely go for this. But at the beginning, where you're looking to take your Mona Lisa trades, this is not something that you should take, especially when you see, okay, we've had an inducement to the downside. What would be the ideal scenario here? The ideal scenario is, imagine we left these equal lows. So let's say like this price action doesn't exist. We left these equal lows. We then trade higher into this mitigation. Then this mitigation is good. But in our case, we have induced to the downside, taken liquidity. So this mitigation is not the best. Okay, makes sense. This is our overall. This is again back to the 5 minute. So what is our next timing? We've had Frankfurt, London Open, MMM 1 and 2. So our next timing is New York Open. Right? So let's do a little projection. Where do we think New York Open could be headed? Damn. What a surprise, right? Again, I know we said let's do a little projection, but when you're trading live, you're not going to be sitting there like, oh yeah, I need to, it has to do this and it has to do this. No, we're just reacting to what we see, right? So initially we were looking for sells here. Then we realized, and you can see it on the M5, built perfect equal lows, gave the reaction away. Again, look at this. We had our equal highs, equal lows. So our resistance now turned support. So, oh yeah, of course, I was wrong. It was resist. It's actually support now. How could I not have seen this? Blah, blah, blah. We induced that during MM2. Lovely, lovely vectors into our POI. We spoke about why this becomes an SMT. Should all make lots of sense. And then what do we have? So realistically, this is not an approach one that you're going to take. Completely understandable to avoid the limit. Why is that? This lies on previous day high. But just because it lies on previous day high does not mean that if we have other confirmations, we cannot take this trade. So let's head into M1. All right, so looking on M1, what do we see? Well, we have mitigation of the inducement. This would be an aggressive approach too. Obviously, we see also this stop is quite big, so maybe you don't want to take that, right? Then Following that, we have our M1 let right here, as you can see, perfect tap, mitigates this. So you can take this trade, put your stop loss above here, trade to the downside. That's our approach 3. Perfect. That will make sense. That is definitely worth the attempt. Okay, so now we have had approach 1, 2. Obviously, we didn't trade approach 1 or 2, and 3. In the ideal scenario, what would be next? What would be next? Exactly. It's going to be our approach 4. Okay? So, but before all of that, let's look at this. So we have now completed lit cycle here. You close this buy likely here, or at least partial it here and hold it all the way up to here. Now we're in this sell. So where should we be targeting? Well, on an intraday basis, we need to see where price gets to near the end of the day. So at this time here, it's a little bit after London close. So we know, okay, we don't expect huge movement for the end of the day. So potentially this gets saved for tomorrow. In that case, what you do is you target your equal lows right here. This is your intraday target, and this is your overall target, right? And that is how you would play this. If you're comfortable holding outside of intraday, then you can target here overall, but it would definitely make sense to at least partial right here. Okay, so as we can see, there's our M1 EDM here and here. That completes approach 1, 2, 3, and 4. And now we know, okay, we can expect price to smash these targets. There you go. There's your intraday target, but look at what we're doing. This end of day consolidation. I guess in this case, we're more channeling downwards, but still, this is end of the day. So we haven't met our overall target by the end of the day. That's absolutely fine. Happens. So there we go. This is your 1 to 5, 1 to 15, approach 2. Again, you could even take your, that's not approach 2, approach 3, sorry. Let's go back to here. Realistically, you can take this because we've got targets much lower. But if you're maybe uncomfortable taking it just off the inducement, absolutely, you can wait for the mitigation with the let. That's your approach 3. Take the trade all the way down, hold it to at least your next liquidity point. We know that that's this, but obviously we're getting towards the end of the day. So the next best target is right here. And there you go. Smacks down. Okay, all of that should make sense. We've just followed, basically just trading away from the inducement, right? Here, we know that, okay, we can get a false reaction. We know that we have 2 scenarios from this point. Either we go right down, induce low, and then we have a bullish day, or we come back up, induce high. We don't necessarily have to come to this POI, but that is the ideal scenario, and that's what we get. We come back to this POI, which was also our M15 inducement. That's our medium one, to trade into our major inducement. That's what these trades are. Trading away from our medium one into our major one. All right, perfect. So there's the RR. Let's go on to the next. So now we need to look at a couple things again. We need to reanalyze the situation. Realistically, not that much has changed. So we're still overall trading away from this inducement, right? Overall, we're trading away from it. We're now, this is Asia low of the next day. We now have a potential mitigation right below. Okay, so this is really, really interesting. We've got our potential mitigation right below, and you can see you need to make it out on the H4 time frame. What happened? This was obviously the day that we've just looked at. We had our false reaction, build up, inducement high, and then we came back, mitigated the inducement before continuing lower. So that all looks really, really good. Everyone should understand that. And now we have our potential mitigation here. So let's jump down to the lower time frame and let's think, you know, what could we expect in this case? Okay, so overall, we know that at the moment, we have a potential mitigation lower, a liquidity build up here, and we have this potential POI. Now, this is going to be more of an advanced trade, but it's still a really, really nice trade. And what is this trade? Well, it's our Fast and Francturious into inducement of Asia low into mitigation of the overall POI, completing your lit cycle. Yeah, makes sense? Can't really complain about that. So let's have a little look. And then, before we even do that, build up, inducement, but we create equal lows right above this H1 POI, just making this trade that much nicer, making this trade something that we really want to look at. Okay, sitting above Asia midline, so you've got your build up, inducement, mitigation, Asia midline confirmation as well to trade into the overall inducement. Very nice. And then again, we go into another build up for London Open to give us the inducement to the downside with what? Strong vector candles, right? Strong vectors. And now we have completed our lit cycle to the downside. So now we can think, okay, now we want to trade away from this inducement, right? So let's do exactly that. We're coming up to Asia high. So at this point, if we get if we come into this, is this going to be a valid mitigation? I'll let you think about that one. Obviously not, right? It's going to be a false reaction from this overall liquidity. We go into a build up, induce that build up to the downside, come back down, mitigate this zone right here. And now, where are we targeting? Well, we know that we've had a build up of liquidity right here. So it makes a lot of sense because, how do I explain this? At this point here, let's just think from like an account management point of view or a trade management point of view. After we come up here, what happens? Potentially, we've just grabbed liquidity, right? We've just grabbed this liquidity after we take this. So next, we could potentially expect a liquidity grab to the downside. Where is that going to be? Well, that's going to be right here, exactly where we took this entry, right? So that's why you need to at least partial here, most likely close, because after this, we will have a liquidity grab to the top side and then we'll come down and grab liquidity to the downside. Obviously, sometimes because we're trading away from this major inducement overall, we might just go like that. But a vast majority of the time, you'll expect some kind of pullback after this sort of liquidity grab, because look at the way we build the reactions and we fake it. Again, this is what we spoke about, showing their hand, showing their hands, showing their hand. They show you what they're going to do. Same with this on the higher time frame, right? if you think about it like this, it was very similar on the higher time frame where they showed us what they were going to do and then they did it. Same up here, they showed us what they were going to do and then they did it, right? So when we have something like this, it's not about forcing what you want to see. Sure, ideally we'd want to see, oh, we get in buys and all the buys fly straight up, but obviously that's not always how it works. Rarely how it works, right? So this would make the most sense to close off this trade right here, as we expect a pullback. We don't expect a full reversal as we are trading away from this major inducement, but we do expect a pullback down, right? Okay. Then, same thing. Building more liquidity right here. MM2, we vector through. Build liquidity, fake the reaction, come back up, mitigate the inducement. We only mitigate M5. So I don't believe that there was an M1 refinement down here. So, you're not going to take this just to trade it back down into this. So you're talking like your 1.5 RR. Okay. So we get exactly what we expect. If I remember correctly, this was CPI. So we just missed, initially, we just missed this mitigation, leaving it here. And then what price does is it whips high, comes down, fulfills the mitigation. So now we've got our lit cycle trading away from the inducement, away from the lit cycle and away from the inducement. Perfect. Then again, same stuff. What are we doing? Building equal highs right here. What can we expect? Price to push higher as we're trading away from this inducement, our higher time frame, lit cycle plus lower time frame one, right? So we obviously expect price to go higher. So let's dive into M1. Okay, perfect. So right here, what do we see? There's the mitigation of this inducement, and then also obviously this mitigated something to the left. And then after that, we give our, again, perfect M1 let to trade into these equal highs. Again, getting close to the end of the day, so likely you can just target that for a quick 1 to 5. Okay, perfect. That should all make sense. And then we go into our end of day consolidation and build liquidity for the next day. Now, let's speak about the daily cycle. What kind of daily cycle did we get? Let's go all the way back. So at this point here, what are the daily cycles that we could expect? Yeah, we don't need this mitigation. That's important. It doesn't need to mitigate. It's not a requirement. So we could expect we could expect a retail heaven, or we could induce Asia low, London open, and then get our London open knockout. Now, obviously, when we see this inducement to the downside at London open, this is the point where you've got to think, okay, at this point, I'm probably getting a London open knockout, and I need to be mainly looking for buyers. That doesn't mean that you can't take sells, but any sells that you take, you have to acknowledge, okay, these are likely going to be pullbacks, so I have to TP with that in mind, right? I have to understand that they're likely going to be pullbacks, so I need to TP pretty conservative. Either you're going to TP at, like, let's say you take sell from here and there's like immediate liquidity here, then you TP there. Or if there's not immediate liquidity there, then what you likely do is you TP on the mitigation itself. So something like that, right? Cool. Okay, should make sense. And then obviously we got our London Open knockout daily cycle. Again, we should know, if we decide to, I don't know, let's say you decide to take this, you should know, okay, I need to target this immediate liquidity here. You shouldn't be aiming for the moon and, oh yeah, we're going to take this low, right? That's not what you should be thinking. Okay, perfect. So now we have a couple questions to answer, but first I actually want to show you the significance of the topside inducement, because technically these are both major inducements, right? So we need to think, okay, obviously all you really need to be doing, you don't really need to have like this level of understanding. You can literally just say, okay, I've got my inducement here. I'm looking for buys. Okay, liquidity build up here, inducement high. I'm looking for sells. Okay, inducement low, looking for buys. Okay, we've completed our overall lit cycle. Looking for sells. Okay, 1, 2, 3. That's our third tap. False reaction. Now we complete the lit cycle to the downside. So we've induced to the downside, and now we're going to look for buys. You can literally do it like this and just understand your most recent inducement and just trade away from that until you get an inducement to the other side, and then you just trade away from that, right? But I want to show you the significance of the top side inducement. So let's have a look. It's not just these H4 equal highs. We have also induced all of this liquidity, all this channel liquidity been induced to the top side. These equal highs induced to the top side. Look at that daily candle. How many people, after seeing this momentum to the top side, right? Pushing with lots of speed. How many people do you think are currently looking for buys at this point here on this daily candle? How many people do you think get FOMO and have a buy right at the top up here? Quite a lot of people. So that makes sense why we give such a violent reaction away from this, and why this becomes the very significant inducement that we should trade away from. Okay, so what exactly does this mean? Well, likely our inducement to the top side should be weighted a lot more than the inducement to the downside. This one right here. Okay, so if we're going to continue to sell off, what we need to see is something similar to this, and that's it. We just need to see a liquidity build up. Inducement high would be lovely if it came with a mitigation as well. One of these points. Liquidity build up, inducement high, trade away, mitigate the inducement, trade back down. And then we will likely come for this liquidity overall. Yeah, that should make logical sense. But for now, we're trading away from this inducement. So buys it is. Nice and simple. Okay, jumping in. So let's remember what happened the previous day. Let's just go back and remind ourselves what happened the previous day. We had significant inducement, major inducement in fact. We're now trading away from that. Okay, all of that should make sense. So coming into this day right here, looks a little bit bare at the moment, but let's put a little bit onto the charts. So again, we have this liquidity build up into inducement, nice vector candle. Although it's in Asia, so we do need to be a little bit wary of it. We also have this liquidity build up right here to the top side. Okay. So coming out of Asia, we induce Asia high. This is our minor inducement. Then you can see we have build up, inducement with vector candles, but we also know, okay, this is the previous day high, and what do we know? We're trading overall away from our inducement to the downside, not just this one, but also our major inducement. So realistically, we should be looking for buys. So this is likely a false reaction at a quote unquote key resistance level, but we have still had a build up and an inducement high. So it should overall be good enough for a mitigation. And then this is very similar to the first day example, right? Where we had build up and then like build up like this, and then we induce low first. If we induce low, then this mitigation becomes less and less nice, basically. Same with this. If we induce low, then this mitigation becomes less and less nice. Simple as that. Don't really know how to put it in any other words. Okay, so then we see huge channel to the upside, induced high, and now we have induced it low. So let's also jump into M1, as this is where it gets quite tricky and quite fiddly, but let's see. So on M1, we actually give a very minor break of structure or change of character, right? So at that point, we have to think, okay, where are people going to be looking to sell from? Well, structure's now shifted to the downside. So this, not only is it where resistance traders are going to be selling from, it's also where structural traders are going to be selling from. So we've got lots of structure traders and resistance traders selling from here now. That just means that we're not going to be looking for sells at all right here. Doesn't necessarily mean that you have to look for buys if you don't feel comfortable with it, but obviously we also know that buys are, from trading away from this inducement and our major inducement, buys are the main play. They are what we should be looking for. So then within this SMT, we have build up, inducement to the downside. Then when you look on M1, this is our inducement to the downside. This is our relevant break of structure, as this is the high that caused the low. So that's our relevant break of structure. And then we come down into the demand candle. But like I said, it's always best to take it with the best chance of being tagged in. So in this case, the imbalance candle is your best chance. So take it off the imbalance with SL, of course, at the bottom of the demand. All right. Again, they could not be making this more obvious as to what is going to happen next. So we now have another build-up. We are building so many reactions within all of this. So many. So we need to, begin to question things like, do they think we're stupid? Probably. And then look, build up, inducement low, what timing? MM2, can't really complain at that. Where should we be targeting? Again, similar to the previous day that we just covered, where we had like a big liquidity build up. There's a lot of liquidity here. So after we take this liquidity, what are we going to expect? At least a pullback, right? And at least a pullback to take some liquidity. And we've got liquidity here and liquidity here. So that means that both of these entries are at risk. And this one here, if this one presents an entry, they're at risk, right? So this makes sense, definitely for a partial point, and realistically, almost definitely for full profit as well, especially if it's above this, as this is our first like significant liquidity point after we've grabbed the liquidity high, of course. Then, boom, look at that. We vector high after we've shown the liquidity. Here we really showed it. 1, 2, 3, 4, quadruple top, right? And then we induce high with vectors. Now, it's time for a pullback. Obviously, we should know why it's just a pullback, but let's first think about where our liquidity is to the downside. So we've got, yes, this was a break of structure and a little minor inducement, but looking at it now, it's just perfect. Not perfect, but relative equal lows. Then obviously our next liquidity point is also here because we've got multiple taps. You know, this is like a nice support zone, also a structural point. So we understand, okay, this is where our liquidity is. Then, as we can see, we had our build up and then also our build up over like our higher time frame build up. This is our little M1 one, but we also had this overall build up, right? So we had that nice momentum to the high side. Unfortunately, there's no real entry within this. You could take it off the demand candle and say, okay, I'm confident in this inducement. I know that we're going to grab some liquidity to the low side. So this is a trade that I want to be in. Even though there's no imbalance with my POI, I'm going to take it right off this demand candle. Supply candle, sorry. I get them mixed up when you're going so quickly. So now, what I also want you to notice is that we are building equal highs here. And this will be relevant in literally a couple seconds. So ideally, we know that we have liquidity here, liquidity here, and we've got that liquidity on the M5 right here as well. But look at what happened. This is where it gets quite tricky. So now we have liquidity built on either side. We've got equal highs up here and equal lows here and here. So what should we do? Well, we know that overall we are trading away from our higher time frame inducement. Yeah, our higher time frame inducement, which was to the downside, and this inducement right here, even though it is in Asia, so it's not the best, but we can still understand, okay, major inducement, and then we have this inducement in Asia, right? But in this situation where you've got liquidity on either sides, what you need to do is you need to wait. You need to wait, you need to sit on your hands, not make any silly decisions, and you need to, just sit on your hands, wait it out. Let them show you what they're going to do. Okay, now we've taken liquidity to the top side with a vector candle, vector candles in New York trap timing. So this is the point where you can jump down onto the M1. You should not constantly be sitting on M1, 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 M1. No. What you need to do is you need to identify your build-ups on M5, and then once things get interesting on M5, i.e. you've induced your build-up, that's when you can hop down to the M1 and refine. And there are some cases where you don't even need to hop down to the M1 to refine. There's nothing wrong with taking it off the M5. We don't need to be getting, especially at the beginning, all you need to be doing is catching the clean moves. You don't want to end up refining something and, let's say on the M5 it's a 1 to 10, but on the M1 it's a 1 to 15. And you think, oh yeah, I really want that 1 to 15. You don't want to end up missing out on that 1 to 15, or on that 1 to 10, just because you wanted a 1 to 15 or a 1 to 12, right? Sometimes we have to go, okay, this is a 1 to 10. This is more than enough. Let's take this so that I get tagged in. That's the exact same reason why over these weeks, I always tell you I take the best opportunity to get tagged in. If that's the demand candle or supply candle, fine. If that's the imbalance, if that's the candle on the imbalance fill, that's fine. If that's the M5, That's fine, right? So I just wanted to make a little note there. We don't want to go crazy with our over refinements. Okay, again, here we don't have our clean break of structure into mitigation. So here, again, this is why we say that the break of structure part is optional, because there's going to be a lot of times where you're waiting for your break of structure, or you may even, be waiting for your M5 break of structure, right? But realistically, is this going to be a break of structure or a liquidity grab? I'll leave that for you guys to think about. Then the entries are like the order flow entry. It's not the nicest. It's probably not something that I'd take. Maybe, especially not for like first trade of the day type thing. But if I'm, if you're already in like a good stead, this is where, you're already up for a bit. You're no longer playing with your own money. You're playing with the house's money. You can begin to, oh yeah, I'll give this an attempt, right? Because the RR is very good. You know that this isn't even your overall target. Your overall target is going to be, and this is, again, I literally just spoke about it a couple seconds ago, watching too much on M1. If you're just zoomed in on M1, this can look really nice. Oh yeah, this is our inducement. Now we trade away from it. But when we take a step back and we look at the M5 time frame, we've got our equal lows here. And we're reacting away. Maybe you've got your smart money traders. Oh yeah, equal lows, FU, this mitigation. But we know we shouldn't take a mitigation from here. Why? Lies on liquidity. So this is very likely a false reaction. What can we expect after this? Interesting. Just tap it out. All those smart money traders that are in here, support and resistance traders that are now at break even, right? People buying from here. After it moves away, they're at break even. So they've all been tapped out at break even. Oh no, what a shame. Vectoring down at the very end of New York trap, and then boom. What a shock, right? Then we take, and this is how they keep them in the game. This is why it's so important, right? Think about it. What happens is they take them out, sometimes by the smallest of bits, right? They'll move to break even. They'll take them out at break even. And then they see price, as soon as they've been tapped out, start reversing and going in their direction. Obviously, that gives them the idea like, oh yeah, this works. I was just unlucky that time. That time it was just unfortunate. Next time it will be my time. And this is exactly how they get them. So again, let's look into the lower time frame. We just had an inducement low. Again, also want to go over this as well. Wicks. These rejection wicks like this, everyone sees this, oh yeah, this is a strong rejection. I'm going to add another position in here and, stop loss below here or below here. But wicks are really good forms of liquidity because everyone sees them as safe. So everyone puts their stop losses below the wicks because they see, oh yeah, it's a rejection. We're rejecting that area. This is a good area for my stop loss to go under. Just a quick little note. And then again, we get very nice M1 let. And then we come down, mitigate the M1 let, take that trade wherever it is up to these highs to end the day for our end of day consolidation. And as you can see, London close was the highest point in the day. So it's instead of getting a London close mitigation, we get London close being the inducement, and then we trade away from it. Realistically, if you're going to be taking, a London close trade, you're probably going to want to get out at like an imbalance fill, maybe a higher time frame one up here, something like that, like M15, M30. You're not going to want to aim for liquidity down here. especially because it's end of day consolidation and we know realistically overall we should be looking for buys. The only reason this liquidity got taken was because we built lots of liquidity to the top side, induced it, built more liquidity, induced it again, and then we came down, sliced out all of this liquidity, and then the buys played overall. So let's just give a quick look at the overall higher time frame from where we started. And again, I just want to point this out. When we started, this right here is 3 days of price action. Okay? 3 days of price action. That's all. A couple of candles. So we started right here. We had false reaction from this higher time frame SMT. We didn't know how far it would react up, but when we began a build up and then we induced it with vector candles, remember I showed that on that M15, we were clued into, okay, maybe this is as high as it goes. We can potentially get a mitigation of this inducement to continue lower. We then came down, gave a false reaction up into the mitigation before the mitigation of the inducement, before continuing lower with nice vector candles, especially on intraday, right? Then we had our major inducement right here. That's not good. Major inducement plus cycle. Yeah, because we've had build up, inducement, mitigation. So now we're trading away from this. And now we're trading away from this, but how do we know how long we're going to be trading away from this? Well, to be honest with you, you don't. This is where you need to get out of the mindset of predicting, and we just need to react. So we've got a couple potential mitigation zones. But how do we know if it's going to be this mitigation zone or this mitigation zone? Or maybe it will be none of them. Well, it's exactly the same as what happened over here and here, right? What do we need to see first? We need to see a build up. Then you want to see an inducement. And then ideally, you want a mitigation. Now this mitigation in this case up here can be a mitigation of the inducement, or in this case up here, it can be the inducement can also mitigate, right? So going into, I think we will cover this at a later point, we'll go into how it plays out, why it plays out the way it does,